Good morning. Welcome to video newsletter number 2 from Tower Property Fund. We were hoping to get one in towards the end of last year, but time ran away with us. So this is the first one of 2020. I wish all our shareholders a great positive year in this tough environment we find ourselves in South Africa. Just to start off, we're going to cover 4 topics. We just thought we'd give shareholders an update as to where we are on 4 major initiatives in the fund. Bearing in mind we are in a closed period, we come out with our results on the 21st of February. So the next newsletter will be post the shareholder presentation, which would have unpacked the results and which would go into further detail on the various initiatives we'll discuss today, with things like numbers, etc. So the 4 initiatives I'll discuss, and I'll refer to my notes a few times, is Croatia, how we're doing there, Old Cape Quarter and the progress with the development, including Old Cape Quarter. I'll discuss Cape Quarter Square with regard to Deloitte's and Pernod Ricard and the new tenancies we will be replacing them with over time. We'll also discuss the Ubuntu Trust, and we'll discuss how we're doing in South Africa in this difficult market we find ourselves in. So an overall commentary in South Africa is that it is a very tough market. Most rentals, certainly most renewals with tenants that you meet with, are asking for flat rentals or rental reversions. There are a few opportunities where we are pushing up rentals. There are still opportunities in our buildings, in our key portfolio, particularly the Sinclair building, where we are getting new lettable area. That's also the case with Cape Quarter. But in Johannesburg, particularly the outlying office buildings, it's not a good story. There is negative rental reversions. I think vacancies in Sandton from all the funds is sitting at around 20%, which naturally affects our portfolio too. In our portfolio, there's 9 properties which are underperforming, and underperforming in terms of vacancies being vacant for longer than anticipated. Those properties are all located in Johannesburg. Other properties, which are key properties in Cape Town and in Johannesburg, we have undertaken retrofits on, including Cape Quarter and Sinclair, and those properties experience a dip in income as we shut down areas to create additional, more sustainable income going forward, and I'll discuss those. So in South Africa, the focus in the past quarter has been on Sinclair. Tower has moved into the 6th floor of the Sinclair building. We were previously in Rondebosch, and we own 5 of 7 floors of this property. We're in discussions actually at the moment to hopefully get some more floors. This is a property we really like. The focus area in Claremont has certainly shifted to around Cavendish Square and the Sinclair building, the square that we have outside of our tenant Tiger's Milk. So this is a property that we believe will grow into the future. We changed the 6th floor configuration. We previously had a call center in the 6th floor, and we've now replaced them with multi A-grade tenants, which we believe increases the value of the property over time. It certainly reduces the impact of call centres on the building's facilities, etc. Cape Quarter, Old Cape Quarter, the development is on track to be completed at the end of February. We do have a number of delay days from weather, but we're working hard to try and get those delay days back. We still have sold 7 of 55 apartments. There are a number of apartments that are under discussion at the moment, and we're confident about those sales going forward. As we've always said to shareholders, plan B is to retain the units and let them out on a short-term rental, as we do with the 14 apartments we currently have in the property. In terms of our big tenant expiries, Deloitte being the biggest, they occupy around 5,000 square meters of space. Their lease expires at the end of October. They'll be moving to the waterfront. And Pernod Ricard move out at the end of July of this year. There are a number of negotiations underway. Some major international hotel groups have expressed interest in that space, and we've received letters of intent from 2 of them. We wanted to make sure that those offers provide us security in terms of a lease agreement and not a management agreement, so we're in discussion on that side. We're also looking at breaking the space up into multiple smaller offices with a large proportion of shared workspace, which would increase the rental and bring the overall rental closer to where Deloitte's were. Deloitte's was a long 10-year lease, and that lease has escalated over time to around 330 Rand a square meter on expiry. The market now is considerably below that at about 180 Rand a square meter. So we're doing our very best to get the right tenants for the property who would assist us with the retail as well as the offices, and to make sure that we try and get as close to the expiring Deloitte's rental as we can. As we make progress, we'll certainly be announcing that to shareholders, and we hope to give a more detailed presentation at our upcoming results. With regard to Croatia, Croatia is doing very well for us. We've had net rental growth of 1.5% in euros from the property. We've had yield compression on all of the properties. There's been interest in certain of our non-core standalone hypermarket type properties over there, and we are in discussion now with potential buyers. The idea would be to sell those properties and to deploy the capital into yield-enhancing properties in Croatia still. We've got excellent, we believe, market-leading relationships in Croatia, and we will look to exploit that as much as possible going forward. Croatia's net income growth augments South Africa's negative growth, obviously not entirely, given that it's only around 30% of our fund, but it is nice to have that hedge in our portfolio, and Croatia is certainly an area that we believe will be a key node for us going forward, along with Cape Town, Sunclair, Cape Quarter, and particularly our Sturdy Avenue Rosebank property, where there are development opportunities. If I can just take you on to further information on Cape Quarter. We've just today received an offer to lease, well, actually a letter of intent, hopefully to be followed by an offer to lease in due course, by one of the large pharmaceutical groups in the country, offering to take 650 square meters on the main square across from Bootleggers. That naturally allows us to relocate some office tenants into the to be vacated Deloitte and Pernod Ricard space. We've also, in Croatia, we've recently managed to renegotiate and refinance a large portion of our debt, the debt that's associated with the Sub-Dubrovnik shopping center and the industrial property Yazaki has successfully been refinanced. Previously, we were paying 4.35% interest. We're now moving on to 2.7% interest, so quite a significant saving there. That is interest only, no capital repayments required in the period of the loan, and all our portfolio is now on interest only or moving towards interest only payments. We're seeing quite a compression in the interest rates that we are being charged on that side, which is a testament to the strength of that business. Our vacancies, our real vacancies there, well, our income vacancies actually are zero there due to the head leases that we have on the properties. Our VMD head lease expires in June of this year. There are no vacancies in that property. We're in discussions with VMD at the moment on them continuing with the management. We think they've done a fantastic job. We're just in discussions on the pricing of that. And in terms of the balance of the portfolio, the real vacancies have come down from around 6% to around 2%, with the Block B of Sub-Dubrovnik being let out and some excellent work being done in the Meridian property. So we are confidently bullish around, bullish around Croatia, and we are not concerned. I suppose we're as concerned as everybody else is on South Africa at the moment, and there are a number of headwinds in the market, the Eskom woes that we face, municipalities looking to increase rates wherever they can, Johannesburg electricity recoveries being difficult to work with, and that negative sentiment being seized upon by tenants in terms of renegotiations. So we're hoping to kind of weather the storm of the current climate. Our loan to value is the lowest it's ever been, at last reported at around 33%, which allows us, we believe, the best opportunity to weather the current economic environment that South Africa presents. The last commentary is on Ubuntu Trust. Ubuntu had a stellar year last year. Ubuntu is a trust and a charity that Tower has supported for a while now. We're extremely proud of our relationship with them. They have received quite a large grant from one of Tower's shareholders, not through our influence, but through that company's employees deciding to support Ubuntu as well as a number of other charities. Ubuntu has had their best soccer performance year of the past 12 months. They won every age category. They won the trophy in terms of the league for every age category that they entered, under 12, 14, 16 and 18, which is remarkable. They are dominating the high performance league in Cape Town, which again is remarkable against some major clubs. And most importantly, their school is starting to work nicely. The first matrics from their school graduated last year. And they really are making an enormous difference in our community. And as per the last video and as per every interaction I have with shareholders, I really would urge you to get involved with them. They're still a bunch of guys. We will put a link to this video now where you can click and just visit the Ubuntu site. And at the same time, we'll put another link now, which will be a link to the Old Cape Quarter development, where you can go in and have a look at apartments and have a look at floor layouts, etc., etc. And we hope to bring you further information on some successful lettings at Cape Quarter in our annual results and thereafter. So thanks very much for listening to this brief chat. We will chat to you all soon. Thank you.